Well, hello, Get Rich Education Nation. It's Keith Weinhold here. I'm in Portland, Oregon at the offices of Ridge Lending Group, the company that's created more financial freedom for real estate investors than any other mortgage lender in the entire nation. And I'm with President Caeli Ridge.
Hi, Keith.
Caeli, you have offered an all-in-one loan product for real estate investors. People can also use it on their primary residence, and it operates much like a home equity line of credit. Tell us about the all-in-one loan.
It is exactly a home equity line of credit, or a HELOC, more commonly found. This is a very unique product that I'm very excited to be offering to investors. It's brand new to the marketplace. This is a 30-year line of credit that you may attach to your investment property. It's been available for the primary for some time, but this is the first time, as far as I know, that investors can take advantage of this first lien HELOC. The unique thing about this, it's twofold, as far as I'm concerned. For the appropriate borrower or investor, it saves a tremendous amount in interest paid. If we look at this in comparison to a 30-year closed-ended mortgage, versus this 30-year open-ended line of credit.
And the 30-year closed-ended mortgage, that's just what you probably have, a 30-year fixed amortizing loan.
Exactly, right? So in comparing the two side by side, the interest accrual that comes in that fully amortized 30-year fixed loan is almost always double, sometimes more, than what the principal amount borrowed initially. With the first lien HELOC, you have total autonomy, total flexibility, and for, the right consumer, the right borrower that has some discretionary income, typically 10% of the total amount of income that you have every month, left in against the line, the interest accrual or the compounding effect of that is greatly reduced, saving a huge amount of interest over time. But for me, although that's fantastic, it's secondary to the flexibility that this affords. I'm so excited about that piece. You become your own bank, effectively.
So with a conventional 30-year fixed amortizing loan like you probably have, once you pay down principal, if you want to get that money back, well, that's like you're trying to go against a one-way street, because once you pay down principal, if you try to get the money back out again and use it, now you have to prove that you qualify again, now you might have to pay fees, and it just is not nearly as flexible as what this HELOC is like, where you can draw it down and bring it back and draw against it and so on. Tell us a bit more about the risk associated with this all-in-one loan that operates like a first lien HELOC.
I think that the risk is really going to be specific to the individual and their discretionary income. For those individuals that let's say, make $5,000 a month, and at the end of the month, day 30, maybe they've got $50 left over, this is not the product for them. That discretionary income, generally speaking, at about 10% is what makes this work. So if there's a risk, I think that it is discipline, probably, for the individual. You guys know how your spending habits are, what those look like. But that would be the only risk, as far as I can see, that would attach to this particular loan product.
Because a conventional loan is what we might say front-loaded, with most of your payments going to interest rather than principal, a HELOC, or this all-in-one loan, is structured differently, such that even if you pay a higher interest rate with the all-in-one loan than you do with your conventional one, you might actually be paying less in interest with the way that it's structured. And you actually have a tool, a simulator tool, where you can compare your current loan terms with the all-in-one and just how that would look, so you can see what your interest savings would be. Tell us about that simulator.
It's so great. An interactive simulator. It can be found on our website, ridgelendinggroup.com. This will allow you to input very quickly. There's just a few forms to fill in, and the results will show you exactly how much interest savings you can expect. There's break-even rates in terms of how much you'll be saving in interest for this versus the 30-year fixed. A whole results page of all the detail that you could possibly imagine on this product that really kind of drives the message home.
And I know you can go up to 80% loan to value on a primary residence, or 70 to 75% with this all-in-one loan with income property. So from here at Ridge Lending Group in Portland, Oregon, for Caeli Ridge, I'm Keith Weinhold. Thanks so much for stopping by.